till we get to that point, the reason it's taking so much time is because there's just a massive educational burden that has to be overcome. And I'll emphasize this with an example. So sometimes I'll talk to people that know nothing about Bitcoin. We go into the nuance. I explain to them for hours, maybe multiple engagements as to what it is. And then, they haven't invested a whole lot of time, but maybe 10 hours in, they're like, oh my God, I get it. I'm going all in. Right. And then they go and they buy a position. And this is typically associated with, we're up 100+% on the year. And that's why they're even interested in talking about it. And so then they learn a little bit, not a lot, but a little bit. And then they want to go all in, or they want to take a really huge position. And the problem is they haven't done, the number that's thrown around by a lot of Bitcoiners, you have to at least do 100 hours to truly understand this thing. And they haven't done that. And so then they take a larger position size that doesn't match the intellectual rigor that needs to go with a position size that can handle a 70% drawdown in fiat terms. And so they take this big position, the price moves in the opposite direction, and then they sell. And then some other cognitive or psychological bias prevents them from ever getting back into it again. Call it the Mike Green syndrome. That they can never go back because they missed the boat because they knew about it in 2012 or whatever they tell you. That I can't go back into it. And then they have, Bitcoin derangement syndrome.
Yeah,
right.
Everybody's got that story, and it's when you get into Bitcoin. Sorry to interrupt, but when you get into Bitcoin, everybody keeps telling you the story, and they think they're so special. Yeah, everybody heard about Bitcoin before they bought Bitcoin, and it's nothing to brag about to say that I heard about it a very, very long time, but I haven't bought it. It's just it's an advertisement of being extremely stubborn in a extremely counterproductive way to your own happiness and success and well-being in life. Everybody thinks their story is special. Oh yeah, well my cousin told me about it back in 2013 when it was at $500. Okay.
Safe. Have you ever been told so and so told me about that in 2006? I've actually heard this.
Yes.
Sorry to interrupt.
Yeah, I've heard those stories as well. A lot of people, I don't know, they just enhance the experience in their minds that it keeps going back in time. But yeah, it doesn't matter when you first heard about it. What matters is when you get it, when you understand it, when you start really stacking it, because all of these stories can't buy you an extra Satoshi. There is no way to insert this into the protocol and say, well, my cousin told me about this in 2011 and I could have bought it $1. So you can't be charging me $60,000 today. I mean, come on, cut me a deal. That doesn't work on Bitcoin.
No, it doesn't. But you hear it all the time.
Yeah.
But that's going to take time. I think then, like to your point though, is let's say we get $1 million per coin. When we look at the market cap at that point, now it's getting really large to the point where I don't know that people necessarily need to conduct the intellectual rigor. They're looking at it now out of fear of not having it, simply because they've seen their neighbor or other people that have benefited so tremendously from Bitcoin. And there's so many people that they know at this point that have benefited from it, that the burden of the intellectual rigor goes down, I think, with time. And the sheer number of people that are participating in this new network and this new money, that they're just like they're participating out of fear as to having to convince themselves that they're right. But yeah, I think we're pretty far off from that. I think you're at I don't know if you've done the math on where you think that point is, but I think it's definitely in excess of $1 million a coin before we just kind of have this moment where people are like, oh God, I got to own this. This is how this is unfolding. It's kind of like in the mindset of, because I think everybody knows there's something wrong. They don't understand what the underpinning of it is. You and I obviously are pretty strongly opinionated that it's the money. And, if you see Bitcoin at 2 million a coin, I think at that point, you're starting to have people saying, oh, this is what was happening this whole time, is the dollar was dying and I need to own this thing over here.
Yeah, I would say, I think the most obvious tipping point in my mind would be when Bitcoin becomes bigger than the treasury market. Because the treasury market, what makes the dollar continue to work is the fact that the treasury market is the world's largest, most liquid market. So everybody says, all of these BRICS countries, they're going to replace the dollar amongst themselves by, I don't know, using something else. Well, nothing is as liquid as treasuries, and that's what it comes down to. And so all of these large financial institutions, large central banks, they need liquidity at size. And you just can't get that in many places. There aren't that many markets where you can come in with $5 billion and buy up a bunch of stuff and then sell it in a few months' time without causing massive carnage to the price on the way up and down. And the treasury market is the world's biggest market in that regard. It's got $25 trillion of things trading every day. Well, not trading every day, but it's the size of the treasuries is $25 trillion. I think at a point when Bitcoin is bigger than that Bitcoin becomes the most liquid asset that people want to allocate to. And I would imagine at that point, Bitcoin would still be volatile. So it would probably need to go a little bit further, although Bitcoin does have an added advantage over treasuries in that treasuries are non-fungible tokens, if you want, in that they are shitcoins, in the fact that one treasury is not equal to one treasury. There are all kinds of different maturities and dates. And so you're buying the 10-year or you're selling the 15 or 20 or whatever it is. And each one of these markets is a lot less liquid than the market overall, whereas Bitcoin at 25 trillion is one market where all of the things are fungible with one another. It's all one Bitcoin equals to one Bitcoin. One sat is one sat everywhere. And so it's a lot more saleable and liquid because it is homogeneous. So if you think of that, it might be even a lot earlier than bigger than the treasury market. But because of the volatility, I sort of still say that, I think the treasury market is the milestone, it's the finish flag, because at that point, it's a lot bigger than any of the individual treasury issuances. But it's likely going to still be a little volatile because at that point, Bitcoin's still nowhere near done. Even if it's bigger than the treasuries, it's still got a long way to run. There's still a lot of monetary assets out there to eat, a lot of government bonds all over the world to eat, a lot of gold, a lot of monetized real estate and monetized stocks. So we won't be done at that point, but we'll probably become the world's biggest, most liquid market and the world's largest cash balance asset.
Yeah.
And then from then on, I would say that it's, that's the fort conquered. And then it's about putting out all of the side resistance, eating up the rest of the monetary assets. But that's the final boss that you got to defeat.
It is the final boss. That's a great way to put it. Yeah, I agree. And I think it's just one additional note, as they continue to expand the money supply and it gets more aggressive by the trillions, by the tens of trillions, that it's a moving Alice in Wonderland kind of ruler. And if you're continuing to look at the entire world with those, through those fiat units, I think it's going to be challenging to know where that parity point is. But if you're using Bitcoin or you're using physical real things, commodities or whatever, additionally, I think that it's going to be more obvious to kind of know maybe where that parity point is, or where you're at parity with the treasury market, right? Because the dollars are just continuing to blow out. And people ask me about Bitcoin's volatility going into the future. In dollar terms, it's going to be insanely volatile. It's only going to get crazier as we go along. But if you're comparing Bitcoin to something that's physical, call it the price of oil, or a home, or even equities at that point, the price is going to stabilize way out there in the future against that physical real thing, which would be, or the thing that has a scarce number of units, which would be Bitcoin. So if you were going to draw out the chart, it's going to look crazy volatile moving further in the time scale if you're just looking at fiat, and it's going to be the opposite for physical real things that you're comparing Bitcoin to.
Yeah, I think as Bitcoin grows, I would imagine that it continues to get, that it would become less volatile in real terms, because as the market grows, I think individual buyers become less and less consequential and will have less of an impact on the price. But, if it was easy, then it would have been done already. I think it's just, people underestimate just how much of an enormous undertaking it is to replace all of the world's monies. And it would be great if Satoshi had invented some magical way where Bitcoin was appreciating at a fixed, steady rate with no dips. Imagine if we just set it at 40% a year, guaranteed, algorithmic.
Yeah. In game theory, volatility is a tool that a game designer uses to allow participants of different skill to play the same game.